Okay, good morning, good afternoon, good evening, wherever you find yourself. I hope you're doing well. Okay, so today is Thursday, 13th of March, 2025, and I hope everybody's having a wonderful day so far. All right, so quick one. I think um, crude oil, we went to the level that I was expecting and they rejected, and it gave a trade idea just a couple of minutes ago. So I was looking for them to trade to the breaker and then reject, which is this down candle here, right? It traded to that. If you remember the fair value gap that I pointed out in New York session over here above this high. So that's the fair value gap right here. Okay, and that's exactly where they went, and then we broke down and then pull back and then rejecting, right? So when I talk about we expecting price to move when price trades to a certain level, right? This is how you're going to be looking for the trade to unfold. You want them to reject, give you a pullback, then you sell that. Instead of we selling as price is coming back up, we want them to give us reason to be a seller. Okay, so same thing with gold. That's what I was expecting them to do, but you can see it hasn't given that. Okay, when I pointed to the previous week high, which is over here, that we are going to come there, run it, and then reject. That's the same thing that you're going to do. Why? Because the fact that we have placed in that swing high on the higher time frame does not guarantee price is going to go down. Okay, there's no guarantee here in price action. The only guarantee is when price actually comes back to the level and then gives you it gives you the break of structure. Okay, so when it comes to that level and it does not give you the break of structure, that is a sign that we don't have a trade idea. Okay, so here gold, when price came to this level, because that's the level we're expecting them to come to and then go down, but when it came there, it did not give any rejection, right? So when it does that, you don't have any trade idea. Okay, so let's see, but let's go back to crude oil because I really want you to see this and let that soak into your mind or your subconscious mind. This is how you want price to give you a trade idea when we come to your level, whether being a buy, whether being a sell. With a buy, it will be the opposite. Okay, with a buy, it will be the same thing but the opposite. The aggressive move away from the level and then a pullback. That's the only way, because the aggressive move is the sign that someone has stepped in, and then it will give you a pullback. Now usually when it gives you the aggressive move away from the level, most people will chase that aggressive move, which is as soon as we go down like this, right? They're gonna start chasing it. But my advice is don't. as soon as you see the aggressive move, place a sell limit at the last down candle. So here on the 1 hour time frame, your sell limit will go right there, because that's the last down candle prior to the move up and reject. So you place your sell limit right there. Okay, but that is also going to be based on the type of trader that you are. So 1 hour is not a bad time frame to use, but you can also use the 15 minutes. So if you're using the 15 minutes, this down candle here, let me take this one off. This down candle here, that's the last down candle on the 15 minutes. So that's where your entry will go, your stop loss, and then okay, so it depends on the kind of trader you are. So mine is, I can use both, and for now I think they will come for these lows here. And they're gonna come for these lows here, and then potentially these two as well, because that looks too clean, right? But this one is definitely a target for the time being, this one right here, because of the gap. Price will want to come and fill in this gap here, so expect them to trade there, and then you look for them to continue going lower to come and attack these lows here. All right, that was just by the way, because it did happen just prior to us starting the session. That's why I've brought you straight away to this trade idea. Let's go to dollar index quickly and see what's happening. Okay, so dollar index, we are getting a rejection off from that level that I pointed out. It did spend some time in here with yesterday's CPI news. However, I'm not fully convinced that we are going up yet, because we have a long way, right? This is a big drop. So if we do get a daily change in the state of delivery, if we're able to close above this down candle, and most importantly that volume imbalance, this one right here, okay, let me transpose that to the other side so you can see on the lower time frame. I like drawing and deleting levels anyway. Okay, there you go. So that's the daily volume imbalance. What do I mean by volume imbalance? Is the absence of a body in here. Okay, you can see there's another one up there, so that's also a volume imbalance. Okay, but this one is the first one, hence if they can trade through that, that's when we will probably be coming back. This high and this low, we will come back into that range. Okay, so today the objective is, let's see if they can go above this. All right, now if they do, then the foreign currencies will start giving a potential drop, and the preferred one will be euro, because euro traded to this candle's high. Remember I said it can either give you a rejection below here or above it, and they went above it, and that's when it's giving a rejection. With euro, watch this last up candle, the low of it. If we can close below that, then again we'll be looking for a meaningful pullback. All right, so just correlate the dollar index with the euro. If we close above this, that means today you don't have to do anything now. You can do something based on the lower time frame, which I'll talk about in a few seconds. If we can close above it, that's when you can do something. That's the day closing. Remember, the day has to close. It's not when the day is trading and then it's above it. That's when you start looking for it to go up. No, the day has to close and then we open a new candle. Okay, the period, which is the candle, has to close. Okay, now on the H4, if it's going to do it, you start seeing signs of it on the H4. So this is how it looks like on the lower time frame. That's the gap. If we are going to close above it, as I said, you will see signs of it on the H4. Okay, you're going to see signs of it on the H4. So this time frame is actually giving you an X-ray view of whether price will be able to do it or not. And then you can go to the lower time frame, which is the hourly and 15 minutes, and then start looking at the institutional order flow. Okay, this is how you do top-down analysis. You look at the high time frame and then you drop down to the lower time frame. Because if the high time frame, if this daily is going to close above it, you will see evidence of it on the lower time frame. If it's not going to do it, again, you see evidence of it on the lower time frame. So with the daily shooting up, okay, there's a probability it can close above it. But what about the H4? Is it showing signs of it? As it stands, no, because it's rejecting it. Then we go to the M15. I think the H1 comes first. Right, that's the H1. And with the H1, you can see it's rejecting. Then the M15. Okay, so this is the idea of the sequencing. This down candle becomes important as it stands for the H4 to sustain the continuation to the upside. For this H4 candle to keep being blue, this down candle needs to be sustained. Right? So that is where we will have more confidence that they are likely going to close above this gap. So watch this down candle on the H4, on the M15, because if they are going to close above it, you will see signs of it, that this down candle here will hold and then they will continue going up. If they break it, then we will resume going lower. And you can use the idea of this up candle rejecting, right, which is a previous day's high. Again, that can be a redistribution, and then we resume going lower. So this down candle, if we break it, that will give you a previous day's high run, and then a break, then you look for lower prices. Okay, that's the only way you look for a trade idea for today. Now, can you actually look for the dollar index to continue going up? No. Okay, you can't look for it to continue going up because it's still within a bearish range, right? This is the last drop, so we are still within a bearish range. if we were above it, that's when you can actually look for a buy to go up. Maybe with this gap, you can look if we're above this, but we are not. So expecting dollar to continue going up right now is a little bit risky. Okay, so that's the narrative on the dollar index. So coming back to euro, it means for you to buy euro, you need to wait for a break of structure to happen, and then you look for the buy. As it stands, you can use this last up candle on the M15 if you're a lower time frame trader. Oops, let's change the color a little bit. Okay, so if you're a lower time frame trader, you can use the this up candle here. If you're 1 hour time frame trader, then use this 1 hour. I like the 1 hour because the higher the time frame, the better. Okay, always remember that the higher the time frame, the better. So if we break this 1 hour, then it's more meaningful. We will likely go back up again. So I prefer the 1 hour, but you can use the M15, or even if you want, you can use the M5. It's entirely up to you. All right. Okay. British pound. I like what I'm seeing. This being the H4, you can see British pound has not actually given much in terms of dropping. The down candle on the H4 still being held. Again, if you want to buy this, I think just wait for the break of structure. Let's go to the M15. I think this on this one, the M15 is not bad. Okay, so if you break this, especially if they can break it with a fair value gap, okay, if they can break it and give a nice gap in here, then when it comes back down, you can buy and then expect them to continue going up to attack this high. Okay, so that's the business on the British pound. On the Australian dollar, this is still weak. It hasn't given much in terms of upside movement for this week. So if you go here, that's where the week started. It went up, came down, came back up, and you're back in. So it's in kind of a consolidation. So I would say leave Australian dollar alone for now. On a daily, again, we are struggling to close somewhere. Okay. Yesterday did close above this, but that's not a good close because we closing above an up candle. We've not closed above a down candle yet. So not great. Okay, so leave that alone. Similar to New Zealand, not great. I actually got some decent scalps, so you can see. That was yesterday. Buying here, and then I got 2 to 1 to take out this high. Yeah, these are all just trade ideas that I've got into. I had a level over here, and that's where prices come to. So maybe with potentially dollar index rejecting and breaking down, the New Zealand dollar can give you a trade idea for this New York session. That trade idea, you can use the previous day's low. You can use the previous day's low. This is a high resistance, so price is not gonna come down here. Let me remove all this. Okay, barely think. I'll say let them come for this low if they can, because that's where we run previous days low and then we break structure. This is the breaker, and we reacted off it and went up, but they didn't trade to that fair value gap. It's a fair value gap that happened in London, so that level will be very influential. So I would say make them, or be patient, let them come back to that level here, this one. Let them take out this low. Let me check other feeds and see if they did take it out. Okay, they didn't. Okay, they didn't. They've not taken it out yet, so you can wait, let them come for it first before looking for the buy. That would be the best option, because if you buy here, I don't know, unless you buy and then you place your stop loss below this candle's low, which is here. That's the only way you be safe, because if you buy and you put your stop loss anywhere in here, they can come back and take you out. And I think we do have news event in the next let me check. Yeah, we do have news event in the next 5 minutes. That's the core PPI and PPI, and then employment claims. So there's high impact news within the next 5 minutes, which we will observe it. So watch that, because the news event can drop price here before going up. So let's do this. I'm not saying buy it straight away, okay? Don't buy it. Let them come there and then give you a rejection. So you can monitor it on the 15 or M5. So what you're looking for is this. Then we look for the buy. Okay, never buy as it's dropping like that. Never, ever. At least a 5 minutes or M15 or M1 has to give you this. Always listen, always never ever buy when price is dropping straight in a like this. When it's dropping, don't do it. Okay, don't do it. That's the best advice I can give you. Don't do it. As much as you know what you know, don't do it. Wait for this and then buy that one. Okay, and then same thing as it's coming up, don't sell it. Wait for this and then do that, at least on a 5 minutes. Or even if you are that type that you want to really, you have to get into a trade, then use the 1 minute. At least let the 1 minute give you that. So here, right, let me zoom in like this. So if you want to be the type that want to be in, then this 1 minute will give you that. That's the move down, rejection, pull back. Then you buy it that way, and then you can leave your stop loss here. At least there is a buy idea or a buy pattern in the lower time frame that is going to protect you. But the 1 minute is sort of a very small time frame, so it can come back and stop you out. Okay, and still be valid to go up, because the buy might be happening on a 5 minutes or a 15 minutes. That's why I recommend using a bigger time frame. But there's nothing wrong with the 1 minute time frame. As a matter of fact, the better you get at doing this, the 1 minute is going to be a very friendly time frame for you. because I'll show you a trade that I took on ES yesterday based on the 1 minute chart. Okay, so there you go. And when you're doing the 1 minute, make sure you don't go for too much, because at any given point in time, price can come back and stop you out. So with this break of structure, buying here, stop loss below that, and then you look for 2 to 1, and then you'll be done. Okay, I always recommend at least minimum 2 to 1, and then you'll be done. Or if you're using the 5 minutes, the same thing. If the 5 minute gives you the break, which it has done now, okay, with the 5 minutes, your entry will be here. So you will not get an entry now. You have to wait for it to pull back. Then you get an entry, and then the same thing. Your 2 to 1 will be somewhere there. Okay. But like I said, news event is in 2 minutes. So this is not actually recommended because of the high impact news. They can't use the news to take it up, or they can use it to bring it back down. If there was no news, then I would say, okay, just buy where we are now, because it's giving a break of structure. But there's news event, so it's not advisable, right? Okay, so we've got about a few seconds for the news to hit the market. Yeah, roughly 30 seconds. So I'm gonna pause, and we're gonna observe the news and then we come back after the news. Okay, this might just take us a few 1 or 2 minutes, so let's see. I'll be back. Oh, okay. It seems like I didn't unmute myself. So all this while I was just talking. My microphone was mute. Anyway, back to this. So what I was saying, because I realized that my microphone was off. What I was saying was on the 5 minutes chart, okay, wait for them to come down here and then reject. Let them close above this up candle. Okay, when they close above this up candle, that's when you look for the buy. All right, if they don't do that, sit and wait. You can also do the same 1 minute price action that I showed you here, which is this one. That 1 minute down, break, pull back to this, and then went higher. You can look for the same thing whilst we are coming below this low. So in the 1 minute, you want to see the same pattern, the same thing here. And then you can use the 1 minute. If not, then just use the 5 minutes. Okay. And I think I was saying something else. I forgot. Yeah. And then I came to ES and I was trying to explain the trade idea that I got for ES yesterday. And that was based on what I gave during the live session, right? When price was trading up yesterday, I said, watch this down candle. Okay, because it looks like they were going to reject and then continue going lower. The reason is we don't have any institutional buying going on because all these up candles they come quickly with a down candle, up candle, quickly with a down candle. That is not a good sign. It's a sign that they will keep selling. Okay, so when price is coming back up into a fair value gap, you want to anticipate them rejecting and going lower. ICT calls it the institutional order flow entry drill, where you basically sell fair value gaps when you're going down. So something like this. When price take out a high, you sell short. And this is the second time they've done it. Okay. So as price was going in there on the lower time frame, this is how it looks like. So if I transpose that there, that's the gap. They trade into it and then reject. As they reject, you are looking at the last down candle. And then you're going to place a sell limit. So they break it here. Okay, so they break it here with this candle. And as soon as that happens, place a sell limit at the down candle. Now you can place it at the candle's low, the candle's opening. It's entirely up to you. Preferably the low, because the low will get you in. If you place it at the closing, sometimes you will not get an entry. So you place it at the low. Or you can divide it into two and then place it at the middle. And then I said, watch over here, because that's basically a gap. So they will trade to this candle's high and then potentially somewhere here. And that's exactly where they traded to. But my trade was done. I was expecting them to continue going down to take out this low. And they pulled back again. So when they pulled back, that same level, the breaker, is still going to react. Why? Breakers, this type of candle, sometimes it reacts twice. We have something called retest and retrade. Okay, retest and retrade. When we break immediately and it comes back, that's a retest. Then I think I might be interchanging them. I'll find out the real for next time. Okay, but when we break and it comes back, that's a retest, and then when you come back to it like this, that's a retrade, or you can swap it. When you break and it touches straight away like this, that's a retrade, and then they come back and there's a retest. Okay, so it does it twice. So when it came back, I was expecting them to go back and attack this low again. Okay, and I sold short that breaker again, this candle, and so far so good. I'm still in it. I'm expecting them to go for previous day's low. Why? We took out a previous day's high, so price is likely going to take out a previous day's low. So this New York session in about an hour, when we start the purple line, you're gonna be looking for a move to the downside. All right. I wanted to sell short here, but based on time, that was inconvenient, because this, yes, you want to trade it based on time. Okay. And the trade was based on the idea that we drop down, pull back. On the H4, we have this red candle, which is a bearish order block. This red candle, a bearish order block. So you want to look for price to come back here and then here. All right. So that is that for ES. I've spent enough time on the currencies. Now let's go to cryptos. Okay, where do we start from? Let's start from AI. Okay, so AI, we have some nice up candles coming in. Is this likely going to continue going up? If we get a close, yes. Let me zoom in on the daily. If we get a close above here, so if we get a close above 0.1916, if we can close above it, yes, we can start looking for price to come back inside this high and this low. It will come back in that range, and this dash down candle can be a target for those that will be interested in day trading it. This down candle can be a target. That will be the breaker. Okay, so they'll come back and retest or retrade it. Okay, so watch that. If we close above this, transpose it to the lower time frame, and then do the same thing as I did with the dollar index. Follow the institutional order flow that's happening on the lower time frame. So our last down candle, it's, let's say, here. Okay, so you highlight that, and then you observe price to make sure we don't close below it. As long as we are above it, then there's a likelihood they will close above the gap on the daily, and then that will give us momentum to go to this candle's low. Apart from that, Solana, I think yesterday we talked about price rejecting. Let me move this. Okay, price rejecting this fair value gap. And I think as soon as I finished the session, price run up, took out the high, and then rejected. So based on what I was showing you on the other side, which is the currencies, this down candle is what you'd be expecting them to break. Yeah, you want them to break through it. I mean, close below it. Once they close below it, you set a sell limit and then expect them to go down. It didn't do it, but I think it will go down because it's forming like a swing. 1, 2, and then the next one is likely going to go here and then down. It didn't close below it, but I think it will go down. If it comes back up again, expect the same thing, and then you look for it to go down. So transpose this and then have like that. So if we come up here, you want to anticipate a quick rejection, and then we start moving down again. Bitcoin, same thing. I think Bitcoin actually broke this down candle, so Bitcoin will drop. Right, we broke it, so that's the run above and into the gap. That's the gap. We ran into it and then we broke down. This is a pullback. It's not gonna go up here, and then you expect them to come down. So Bitcoin 80,563. That's your next downside objective. Ethereum, that was dead. It didn't even make it up to that high and rejected. It's created equal high, so be mindful selling this. It can run up quickly, clear out the equal high before going down, so I don't recommend the ES. Hype, it couldn't go above the previous day's high, and we continue going down. Now let me go here. Actually, is this one. Notice that this run rejected. With the rejection, it couldn't break this high. That is a telltale sign that price is not likely going to continue going up, especially in this weak price dropping. When it cannot break the up candle, it means that price is very, very weak. So hype, we are likely going to continue going lower all the way to this candle's low. Now where we are, I have no idea, like literally what price is going to do from here, because that's basically the beginning of hype. There's nothing, unless there's another chart that has more data, because 1, 2, 3, 4, 5, it didn't start at 1 or 2 or 3, it just started at 12. So it can't keep going down, I don't know, to these numbers. On the chart there's no data, so I can't say okay, there's a auto block here, there's a fair value gap here, price is gonna react to. There's nothing like that. So based on that, I can't give you where price is gonna go. Apart from this low, if we don't get any reaction from here, then they will take out this one, and then that's it. I don't know what price is going, unless I'll find more data on a different exchange, then I can give you more information. But if we go and we don't have any reaction, which based on what I'm seeing, not likely. This up candle is a redistribution, so we might continue going lower. Okay, we might continue going lower and probably break this, because these numbers are still positive, so they can still trade to these positive numbers. XRP, XRP was the only one that couldn't give you a rejection after trading to it. Okay, it rejected. Let me zoom in. It rejected, went down. Now, if I was trading this will not be a pair that I would like to sell, and I've given you the narrative as to why. Okay, the narrative is this is not going to go down. As much as all the other ones might go down, this one will not. Okay, so take this out of your selling pairs, because if you sell it, you'll be in trouble. Just wait, let them give you the buy. That's all. Right, so we're still struggling with this gap here. We took out previous day's high, we couldn't continue, it broke down. This becomes a breaker, you sell it, and then you look for continuation to the downside. Okay, so I think we might be coming for this low into this candle's high. Okay, so that's all. Look for it to go down here. We probably will break this, but it's a high resistance, so that will be the last small little gap left that price will fill in. Then we'll see. I think it will continue going down and break this low as well, because it's not, the fair value gap here is not allowing price to trade through it, so we will continue going down essentially. And then finally touch key. I still think we might touch this level and then come back down again. This level here. All right, so the trade that I took on ES, this one, it was based on that same idea. Let me go to the one. Let me tell you why I think that's what will go to that candle's high. This one. Okay, if I'm expecting it to go down, this is the impulse leg, and these candles high, this one here, this is the last up candle prior to the move down. This candle's high is essentially OTE. If I pull the fib, okay, that's OTE. Actually went way beyond it. That's 88.8. But this candle's high, that's the A1. Now why that candle's high? It is this one because when price was going down, this is the, if this candle did not go above that, then it will be this one, right? If this candle did not go above that one, then it would have been this one. But since this one went above it, then it's that one. On the lower time frame, is that one right there. Now why this one? Is because when we look at a range like this, right, especially after taking a high, this creates what we call a dealing range. And within that dealing range, price has specific levels that it wants to trade back to, and that specific level is, this will be the aka original consolidation. This is where price will originate from, and then we break. Once we break, price will do like a small pullback, and then we go down, and another pullback, and then we go down, and then another pullback, and then go down. This first pullback here, the stops above it or the low, okay, that's basically where price, it's kind of most of the time coded to come back to, either here and then go down, or here and then go down. So that's the same level on the high time frame I was pointing you to on euro. Okay, so euro, that up candle on the daily right? The low of it or the high of it, that's where price will reject and go down. So on ES, no, get rid of. Okay, so on ES, when we broke down, this was the first move up, and then we went down. Then we, sorry, first move up OCA. Here, as we break, that's the first move up, then went down, up, and then went down, then this up, and then went down. The first one, after the break, the low, this candle's low, and then the high. That's your most important level in this range between this candle's high and this candle low. That's your most important level. You want them to come back to this or that, and then you expect them to reverse. Okay, so the same thing is happening right now on euro. This candle, the low or the high, that's where a reversal happened, and you can see that right now. Okay, so here, the reason why I was pointing you to that candle is because of that. After the break will happen with this candle. This will be the first pullback on the lower time frame. This candle. So we break, pull back, down, pull back, down. So when it's coming back up, the candle's low, and the candle's high. That's where you expect reversal to happen. So that's why I said when they go above this gap, then price will trade up here, and then you expect them to reverse. Okay, so in case you don't understand why I was pointing to that level, this is why. All right, so there you go. If you learned something new today, I think that's it. Let's go back. You've got about, okay, it's 1 already, so my time is up. I thought we had a few minutes to go. Nevertheless, I still want us to look at this pair and see what price is doing below that level. Wait for 2 p.m. Okay, let me go on the H4. Okay, the H4 is showing signs of it. You can see the H4 giving a big candle, trading through it, right? So that's a positive sign. Now, let's go back to the M15. Notice that this down candle couldn't break, and then we had a big range above it. Okay, so this is what sequencing means. Had they broken, or if price was able to break this, then you're gonna expect them to go down. But with this big range candle going above it, that means there's a high probability that this gap here will be closed above, especially with the H4. If this one can sustain, because I like using high time frame. Not, yes, you can say the 15 minutes has closed above it. It doesn't mean anything unless this time frame, and it's not just any random time frame. This is a H4, a session. Okay, this is the London session. So if London session can close above it, then there's a high probability New York will sustain that. So this level will then act as a support. So if New York comes in at 2. If you see it coming back down, it will touch this and then expand up again, right? And then trade to this one. But since we've broken that, this one can act as a support, and this one, yes, it might resist a little bit, but then it will break through it again. Okay, so going forward, we are expecting dollar index. If this H4, okay, listen to my words closely. If this H4 closes as it is, then going forward, you want to look for foreign currencies to drop and then dollar index to go higher. And then at 2, watch ES to go and attack previous day's low. And then obviously, crude oil is doing well as well. Okay. All right. So that brings me to the end of today's session. Enjoy the rest of your day. Probably, I think there will be an update this weekend. Our portal is doing very well, and you'll be able to ask questions. Our subscribers, the private subscribers, will be able to ask questions, and then I'll see them over here, and I'll be able to kind of go into much details of whatever question that is being asked. If you're not in, get yourself in, because soon we might probably be going private. Enjoy the rest of your day.